what is green and what are climate compatible investments. And those definitions and guidelines are developed through multi-stakeholder engagement, and we bring together a lot of technical, scientific and financial market experts to really develop those standards. And we also have develop investor confidence through the assurance and certification around the green definitions. Our second key area of work is around information flows. We provide a lot of information to rating agencies and index providers because we see a key part of market development for green bonds is robust and extensive and reliable data. And just very quickly, the picture or the icon on this slide is an image of our latest 2016 State of the Market report, where we report a snapshot for the year just gone of climate-aligned bonds and green bonds in particular, and also our market blog that Johnny mentioned. We have basically real-time updates when new green bonds are issued, if you'd like to keep in touch with that. The third area of our work is around outreach to inform and stimulate the market, and we do a lot of work around policy models and government advice, and we're making particular efforts in emerging markets to grow issuances, and this includes but isn't limited to China, India, Brazil and Mexico, and a number of other emerging markets where we're trying to really help inform domestic regulation and also just market development from commercial players. And very lastly, our fourth big area of work is our Partners Programme, and this provides a platform for market participants to get involved during the formative stages of standard development, and it's really tailored in a way to support CBI's efforts to accelerate growth in green bond issuance and demand. And for those who would like to get deeper into the partner space, please do contact us. We're always open to discussing that. And just very quickly, just for those who are new to this field, I'm just going to give a quick recap of what green bonds are. And very basically, a general bond is a form of debt, and the bond issuer is the borrower, and the investor is the lender. They're usually used to finance large and mature assets. You see bond issuances often in the hundreds of millions to the billions kind of value. They are issued by a really large variety of entities that includes companies, governments, municipalities, commercial banks, development banks, and many others. And they form a really important part of investment portfolios for investors such as pension funds and insurance companies, etc. They're often seen as a defensive investment. It's often said that you go to the equity market to make money and you go to the bond market to keep it. And generally they are more secure investments and they offer lower returns in respect of that. And a green bond specifically is a bond where the proceeds are used to finance environmentally friendly assets. And this really has an impact on who wants to buy, attracting particular investors who have an allocation of their portfolio to green or climate initiatives, or sometimes social initiatives as well. And we hope, obviously, that it's going to have a significant impact in turning around the carbon development trajectory in all countries. And on that note, it's been estimated that $50 to $90 trillion is needed to finance low carbon over the next 5 years, and it's really something that we can see climate bonds and green bonds forming a huge part of that investment. From a climate point of view, when we talk about climate bonds, we're talking about mitigation and also adaptation and resilience. But it's important to note that in the investment community, we're often talking in terms of asset classes. So today we'll be talking a bit more about wind, but there are obviously other key sectors. So there's a number of renewable energy asset classes, including solar, bioenergy, geothermal, hydro, and marine-related energy assets. There's low-carbon buildings, low-carbon transport. Water assets are going to be key in a low-carbon future, and really in an adaptation and resilience future, water is going to be increasingly important. And we also have on this slide other examples, including waste management, pollution management, land use sectors, including agriculture, food supply chains, forestry supply chains. And lastly, it doesn't have an icon yet, but we also have here ICT and broadband, so that's information, communication and technology. and the understanding that those kind of asset classes can have a real contribution to make in terms of what they enable people to do to reduce their emissions in other ways. And really our vision for 2050 is a low-carbon world where we have solved climate change to some extent. We're in the boundaries of 1.5 degrees, and what we're trying to do here is identify assets and investments that we need to make now to achieve that vision. And then the following slide is a bar chart showing the growth in the green bonds market. The market really started off in 2007 and 2008, and it continued until sort of 2012 to 2013 to really be dominated by the development banks. It started initially with the World Bank and the European Investment Bank, but you see in 2014 and 15, the kind of dark red parts of the bar chart is really when corporates really started getting on board in a much bigger way. And we anticipate for 2016 a significant jump up from the 45-odd billion in 2015 in total issuances to up to 100 billion in 2016. And a big chunk of that we estimate will come from China. The People's Bank of China specifically are estimating 46 billion of green bond issuances from China this year. So we will see where we get to with those projections. But so far we're on track with those kind of numbers. In terms of the range of assets that are being included in green bonds, we have a large portion here, the yellow part of the pie chart, which is clean energy, including wind and solar particularly, but not exclusively. And then we also have a significant portion for low-carbon buildings, low carbon transport. That includes rail in particular and road, where we're talking about electric cars or similar, buses and other low-carbon improvements to the transport sector. Water is a sizable chunk as people invest in water infrastructure for the medium to very long terms. Really adaptation and resilience is going to be a key aspect to those kind of investments, so they'll be really important to see in the green bond space. And those are the smaller segments down there, small at the moment, but definitely growing, and that definitely includes the agriculture and forestry space and waste and pollution control, where we expect to see real growth in those sectors as well. One question we're often asked is, what's the value to investors and to issuers of investing in or issuing in a green bond, particularly when there are costs to deliver green bonds compared to non-green bonds? This slide just summarizes some of those benefits. From an issuer's point of view or the borrower's point of view, what issuers often see is investor diversification, so they can often access new investors that they haven't been able to tap into before, investors who are interested in green or climate change issues, and it can really help to broaden their investment base, which is important for them. And those investors tend to be stickier, so they tend to hold on to their investment for a bit longer. And this situation often has led to oversubscription of green bonds, tightening the yields. And I think this excess of demand over supply is a key part of the market at the moment, so definitely scope for more supply in the market. And generally, actually, for issuers and investors, one key advantage to issuing or investing in green bonds is the strengthening of reputation and the strong messaging and PR that can come from being focused on green bonds, and can lead to deeper engagement. I think one thing that's interesting about green bonds is really the focus on the use of transparency and a real emphasis on use of proceeds. And I think that kind of emphasis is helping to basically improve transparency in a way. So investors are getting a lot closer now to having a deeper engagement with company management and what is green and what's the nature of those assets. And it's often said that what's measured is managed. And I think it's commonly the case that well-understood projects and well-managed projects are really reducing risk exposure, which is a key attraction to investors in green bonds. And then when it comes to standards for green bonds, it's important that if issuers are claiming benefits from the green aspects of their bonds, they need to protect investors from greenwashing. And where this market started with the development banks, those entities have strong expertise and processes. As corporates entered the market, more questions were raised around potential for greenwashing and the variety and the diversity of definitions and inclusions that people were making about what actually is a green investment. So in a sense, a standard is a system of environmental due diligence to review key environmental attributes, and it really is aimed to complement existing financial due diligence. There are a lot of assets in this space with uncertainties over climate change risks and opportunity, and really if you can have a system of due diligence which clarifies what is a positive climate change investment, I think that's a really big positive for investors and the market generally. And it's important to know that it's very difficult for investors to do this kind of green assessment themselves. Specialist expertise is often needed, and this can be really difficult, and even if it's possible, it can be costly for investors to assess and verify this themselves. And really, it's not feasible to expect investors to do these kind of deep dives on the green aspect themselves. And therefore, out of that, we can kind of identify some key principles for a good system of environmental due diligence. And these might include that it's scientifically robust, it really will deliver climate-friendly outcomes, it's transparent, and it's consistent. I mean, a key thing about a standard is that it can bring comparability across the market, and that's a really key point to reducing and minimizing transaction costs. There's probably three key dimensions to green bond labelling. The first one is reach. And this really depends on the sort of program or programmatic approach taken. So are we talking about voluntary or mandatory participation? Are we talking about recommended guidelines and principles? Are we talking about fixed standards and requirements? And that kind of matrix of option will really affect the reach that the labelling will have. The second dimension is scope. And there's typically three parts of this. One relates to the process for the management of funds. To be transparent about that, to have clear requirements over the management of funds and possible ring fencing of the funds, for example. The second element is reporting requirements over the use of funds and the existing funds remaining to be spent. And the third part is actually what counts as green, so actually identifying what are green or climate-friendly assets. And in this space, you often hear talk of green taxonomies, or green definitions or eligibility criteria. And the last, but by no means least key dimension is the assurance process. And it's really that investors want confidence and low risk of greenwashing. They want to know that they're actually going to get are investing in green outcomes. And there's a number of approaches to the assurance. First-party assessment is really where an issuer defines for themselves their green framework or their green definitions, and they verify that themselves. They do not have an external independent opinion on that. Second party is a step along, so still the issuer determines their own green framework and their own green definitions, maybe with input from other parties, but it's the issuer's decisions over that, but they do have an independent oversight and assessment of compliance with those frameworks and definitions. And the third one is third-party verification, where both parts are external. So the green definitions of the framework are set externally, and there's independent verification of compliance against that framework or criteria. And just very quickly, a very quick history of the evolution in green bond labelling. So a variety of the approaches have been taken so far. So I said the first bonds were from development banks, and it was actually the first one was in 2007 from the European Investment Bank, and it was the EIB's own green label, self-assessed, so essentially the first-party assessment. And similarly, the second green bond from the World Bank was similar, had its own green label, and it attracted a second opinion from Cicero on that one. In 2014, when corporates started coming into the market, they started to utilise the green bond principles and became subject to a second opinion. And the climate bond standard actually was started in 2011, but it was reinvigorated in 2015 to become more rigorous and also to become aligned with the framework of the green bond principles. and it really builds on the Green Bond principles, but takes it further to define a climate-compatible taxonomy of eligible investments and eligibility criteria, whereas the Green Bond principles identifies categories but doesn't go to that level of defining a taxonomy and eligible investments. And actually, more recently in the evolution, we see countries developing national green bond regulations, and China is a key example in this, but by no means the least. So China have recently developed their green catalogue, essentially, in their green bond definition. Looking forward, investor demand for green bonds and climate bonds is strong, and we really see it increasing in line with the delivery of credible and quality products into the market. Standards, assurance and certification are things that investors repeatedly call for and identify as key to improve confidence and transparency, and it's those things that will really drive further strong growth within the mainstream debt capital markets. There is, of course, the risk that if robust standards and independent verification are not used, then green bond labelling may really lose its impact. And governments have a key role to play in both developing, encouraging market development, and also potentially, depending on the context, developing and rolling out mandatory green bond regulations. And that approach is varying country by country according to the context in those situations. Either way, regardless of the approach that's taken in different countries, what will be really critical to success to see the green bond market really taking off is consistency of approaches across all territories and harmonisation as much as possible in green bond definitions and eligibility criteria. This will really help investors build confidence, and it will also help issuers to minimise their requirements if they're issuing across territories. And that in turn will minimise transaction costs and help to accelerate progress further. Just moving on quickly to the Climate Bond Standard and Certification Scheme in a little bit more detail. The certification scheme has a number of elements. The first one is clear, objective and sector-specific climate eligibility criteria for projects and assets. The second is clear mandatory requirements regarding the use of proceeds and tracking and reporting requirements. And the third is certification by an independent climate bond standards board. And represented on that board is investors and NGOs with $36 trillion of assets under management. And they're investors from a broad range of specialities. I think, as I said before, but it's worth repeating, the Green Bond Principles are fully integrated and the Climate Bond Standard is fully aligned with the Green Bond Principles. So if you are certifying under the standard, you can be confident that you're fully aligned with the principles. And lastly, the standard is set up so that a wide variety of bond types are eligible for certification, again, to increase take-up in the market. One last thing, it's really important to remember that the Climate Bond Standard is an environmental standard and not a financial standard, so investors must always do their own credit analysis on their bonds. And in practice, the standard effectively provides clear requirements for issuers and their bonds to be labelled as certified climate bonds. The certification process aligns with the normal phases of the bond market. So there's a pre-issuance phase where relatively quick to market, and then there's a post-issuance phase within sort of 12 to 24 months after issuance where further verification is needed regarding the actual use of proceeds and whether it was in accordance with the proposed use of proceeds per the pre-issuance stage. The standard itself composes of two key parts. The first is the parent standard, and this incorporates the general requirements around management of funds, reporting requirements, etc., and the overall climate bonds taxonomy. And then alongside the parent standard is a suite of sector-specific technical criteria. And I'm actually just going to go quickly to the next slide because this slide shows that suite of technical criteria. And I'm not sure how easy it is to see on the screen, but all these sectors and subsectors with blue ticks, we already have criteria out in the market, and that includes solar, wind, geothermal in the energy space, a number of aspects of low-carbon buildings, a number of aspects of low-carbon transport across rail, vehicles, mass transit and buses. And we're doing a lot of work at the moment to expand further in the renewable energy space. So we're doing work on hydropower, bioenergy, and wave and tidal. And we're also doing work around nature-based assets, for example. All the ones with a yellow dot are currently underway at the moment. So that includes agriculture, forests, conservation lands. Water assets is another area where we're currently doing a lot of work. And basically, we are working hard to fill out this library of criteria. It's really critical that the broader this library is, the more bonds will be eligible for certification. So it's a key priority for us. And then this next slide just has an overview of the overall process of certification. So I mentioned previously that there's two parts to it. There's pre-issuance certification and post-issuance certification. And in the pre-issuance certification, the issuer must appoint a verifier, and they undertake a readiness assessment. And there is a list of approved verifiers on our website that we have pre-approved for issuers to call on. And basically, the issuer will submit information forms and the verifier report to CBI for assessment by the Climate Bond Standards Board, and the Standards Board will confirm pre-issuance certification. And this then means the issuer can use the certification mark in its marketing and documentation, and as it undergoes its roadshow to go to market. And then post-issuance, there's a follow-on procedure. So once the issuer has closed the book, issues the bond, allocated the proceeds, it will bring the verifier back in and ask them to undertake assurance procedures, write another report on that. And as I said previously, that is basically to ensure that the use of proceeds has been allocated as was intended and is still compatible with the climate bonds eligibility criteria for what is green. And then the issuer submits the updated information form and verifier report to CBI and the Standards Board, and the Standards Board will confirm climate bond certification. And at that point, certification is valid for the term of the bond, unless we detect a problem based on the annual reports we receive from the issuer or any other source of info, at which point we would investigate further and take necessary steps at that stage. The following slide is just a visual overview of the number of parties that have been engaged to date, and that includes a really fantastic range of issuers, including banks, financing groups, public entities, development banks, and all sorts of different sizes, scales, locations, and that's really, really great to see. And similarly, in the verifiers, we're working hard to approve an ever-growing number of verifiers that operate at different scales, maybe have different sector specialisms, different location specialisms, and some of those parties are shown on this slide here. And I think investors really appreciate this as a peer group of theirs, and it's really this that builds trust and confidence in the system. And then lastly, just on the left, are the members of our Standards Board that take the final certification decision. And then I'm going to do a little bit of a deep dive into the actual wind criteria. This next slide shows the actual technical criteria, and these are basically used to tell you how to identify projects and assets in the wind sector that are eligible for inclusion in a certified climate bond. I'm going to take this apart in the next few slides, but essentially in our 2050 vision, wind is an important part of the energy system, and therefore we really focus on production and delivery of wind energy and key components to make that system happen. Okay, so breaking that down a little bit, we use the words operate or under construction to operate, and by that we mean that wind assets can be either existing facilities or facilities under construction. And obviously bonds are often used as a refinancing tool, but not exclusively, so we enable both existing and new facilities to be included under a certified bond. And by development, construction and operation, we therefore include project development pipelines, and we include investment in the full project development cycle, and we include the total cost of delivered power, including operation of the facility. And it's really intended to get these kind of terms and the phrasing of the criteria are really intended to capture the full value of the assets being deployed. One of the key things is that we include production or manufacturing facilities wholly dedicated to wind energy development, and some examples of components of that would be manufacturing facilities, turbine, gearing, electricals manufacturing and assembly, mast manufacture and assembly, transport infrastructure, blade design and manufacture and assembly and transport. And it's important also to note that a whole lot of associated infrastructure is important to bring wind power into the system. And we look to include that as well in the certified bonds by including for eligibility wholly dedicated transmission infrastructure. So this is essentially connecting infrastructure to the grid and any equipment which enables wind power to be transmitted. And at this point, I'm going to hand back to Johnny and look forward to hearing from our colleagues at NAFIN.
Thank you, Annette. Emilio, are you there?
Yes, we're here.
Great. I'm just going to make you a presenter.
Okay.
And over to you.
Thank you. Good morning, everyone. My name is Emilio Garmendia from Nacional Financiera, and to my right is Arturo Gochicoa. First of all, we would like to thank CBI for inviting us to be part of this webinar, and secondly, to thank every one of you for taking part. It's our pleasure to share with you our experience with the first Mexican green bond certification. As you can see in this slide, let us first talk about who is Nacional Financiera. We're a for-profit national credit institution wholly owned by the Mexican government, established in 1934, whose critical role is the financing of micro, small, and medium enterprises, and to promote Mexico's economic and social development. As of March 31st, 2016, we had the following key credit metrics: a total loan portfolio of $9.8 billion, with a non-performing loan ratio remarkably below industry standards of 1%. Our non-performing loans are conservatively covered given their corporate nature at a 291.9% NPL coverage ratio. Total assets of $22.6 billion and shareholders' equity of $1.5 billion, resulting in a healthy capitalization ratio of 13.9%. In this slide, we understand the importance of NAFIN sovereign ownership and the government guarantee. As our organic law states, the Mexican government shall be responsible at all times for transactions entered into by us with Mexican individuals and companies and non-Mexican private governmental and intergovernmental institutions. Next slide. NAFIN is an institution that has evolved and grown substantially over the years. NAFIN was established in 1934 with a mandate of promoting the capital markets in Mexico. Then, in 1986, NAFIN's new organic law was published, transforming NAFIN into a development bank. This triggered a remarkable growth in our loan portfolio and gave us additional flexibility to pursue our mandate. In 2009, the Sustainable Unit was created, and 1 year later, we became the first Mexican bank to provide finance to a wind project. Finally, in October 2015, we issued the first green bond in Mexico, demonstrating that green bonds are an effective way to channel money to environmental projects in the region. Hence, we received the Bond of the Year award by Environmental Finance in 2016. And now, with further ado, let me introduce Arturo Gochicoa, who will be guiding you through the green page. Thank you, and I will come back with you shortly.
Good morning, everyone. I am Arturo Gochicoa. I'm currently working at NAFIN Sustainable Unit. It's my understanding that you will get the presentation of the webinar, so I will just jump to the main points of each slide. Can you go back? Okay. The first few slides will give you an overview of Mexico's sustainable goals and initiatives. Mexico has been a long-standing leader on environmental issues, especially climate change and the use of renewable energy. In March 2015, Mexico became the first developing country to submit a 2020 climate change plan in the UN. Mexico followed the European Union in laying out their commitments to reduce greenhouse emissions. Under this plan, Mexico committed to reduce 30% of the green gas emissions in comparison with level of record in 2000. The Federal Commission of Electricity reduced fuel consumption by almost 45% from 2012 to 2014. The graph on the right highlights the additional generation capacity goals that the Energy Program Plan is looking to achieve from 2015 to 2029. As you can see, the low-carbon technologies are diversified about a number of renewable energy sectors. Currently, NAFIN is participating in projects in almost every single technology mentioned in there, like wind, cogeneration, hydro, and geothermal. In addition, we are developing a program alongside with other international entities to finance geothermal technology in Mexico, from the exploration phase until the construction of the plant. In this slide, I highlight NAFIN evolution on sustainability and the leadership we have provided within Mexico and the world. In 2009, we create our Sustainable Project Unit to focus the growth upon our mission to finance environmentally friendly projects, primarily looking at renewable energy infrastructure and generation. Initially, we started with one professional, our director, Enrique Nieto. Today, I can say I am part of a team of 16 professionals developing projects all over Mexico. Today, our main objective in this department is to finance national and international companies and financial intermediaries from both private and public sectors that promote projects in Mexico oriented toward environmental, economic, and social development. It is important to highlight that NAFIN follows the policy of performance standards and social and environmental sustainability of the International Finance Corporation, the IFC, and the World Bank General Guidelines on Environmental Health and Safety. Going forward to 2010, NAFIN became the first bank to finance the wind project, as Emilio mentioned before. It was a great learning experience that started our wind portfolio. Since then, we participate alongside with multilateral development banks, including the IFC, the IADB, the CAF, the DAG, and Proparco. Now we have the knowledge and skills to be the main development bank structuring new projects and bringing international investors to Mexico. At the bottom of the slide, you can see some highlights of our recent actions, awards, and involvements in the sustainability sector. Clearly, today, we are proud to say that together with the Green Bond offering, we obtained the Climate Bond Initiative certification and a second-party review from Sustainability. Next slide. I will now discuss a NAFIN energy program and funded projects in the renewable energy sector. Since 2010, NAFIN has funded a number of wind projects for which the electric power generation has grown almost 3 times. Today, we have projects in 5 different states of Mexico. This diversified portfolio has clearly provided significant impact to different communities around Mexico. In this slide, I will tell you the main highlights of the program. Since 2009, NAFIN has been involved in 10 wind projects. Combined, they represent a total investment on the wind sector of around $3.4 billion US. These 10 projects represent a reduction of 2.4 million tons of carbon dioxide. Also, we calculate that approximately for each dollar granted on energy loans by NAFIN, there is a total investment deployment of $10 in these sectors. I'm happy to tell you that we have contributed in around 1.6 gigawatts of installed capacity in Mexico, enough to cover the demand of 646,000 homes. The next 2 slides will show you a couple of examples of the projects that we are participating in. In this first slide, you can see one of our projects in Oaxaca that does not only have a great off-taker like Walmart and ArcelorMittal, it also contributes to the community in different ways, like rehabilitation of local roads, donation to school supplies and furniture, rehabilitation of La Casa Ejidal. In general, the community gets a lot of support from the development of these kind of projects. The next example, it will be the first wind farm that was a cross-border project. This project sends energy from Baja California to San Diego Gas and Electric in the U.S. NAFIN was the only Mexican bank to participate in this project, which contributes to the local community education by giving school supplies and donating computers with a commitment of developing different programs. I would say that all our wind portfolio has high quality of takers and sponsors with experience in the sector, willing to contribute to the community that they are investing. Now I will pass the stage to Emilio so he can tell you more about the green bond experience so far.
Thank you, Arturo. We will now talk about the green bond certification experience. The Deputy General Financial Division in NAFIN, directed by Pedro Guerra Menendez, whose strong leadership has been remarkably in this institution, has the primary function of managing funding processes, investments, as well as national and international resources. It ensures sufficient funds for the financing of small, medium, and micro, small, and medium enterprises, and sustainable projects. All of this under competitive opportunity conditions, time, and costs in order to meet NAFIN's obligations arising from its fundraising. In 2015, as a new form of funding and after 18 years of absence in the international market, NAFIN successfully issued the first Mexican green bond with a demand reaching over 5 times the 500 million transaction size. Obtaining the climate bond certification and in second-party review focused especially on 9 wind farms in Baja California, Nuevo León, Oaxaca, and Zacatecas. It seems it kick-started a movement in the region as some big names have tapped the market, like the Development Bank of Costa Rica, the Inter-American Development Bank, securing backing from the UN Green Climate Fund to issue asset-backed green bonds, and the Mexican Stock Exchange launching a platform dedicated to green bonds. Let me highlight, they had an acceptance from over 100 investors from Asia, Europe, the US, and Latin America, as well as a well-diversified final order book with 60 investors participating and representing all major regions like the US with 40%, Europe with 32%, Latin America with 15%, and Asia with 13%. And now, let's talk about some of the highlights of the green bond transaction. It was the first green bond in Mexico, as well as the first green bond in Latin America with a climate bond certification by Climate Bonds Initiative, who evaluated NAFIN's green bond transaction alignment with the Green Bond Principle of 2015. We engaged with Sustainalytics to provide us with a second-party review on our sustainability bond framework, like the use of proceeds, product evaluation, selection process, management of proceeds, reporting, and the compliance review. Let me explain to you that the Green Bond Principles of 2015 recommend the appointment of an external party to conduct reviews, and there are several options available. But it can also be an advice from consultants with a specialist environmental expertise, a verification from auditors, or a certification against an external standard, in example, Climate Bonds Initiative. In our case, we use both because we have to make a really big splash to return to the international market. So we wanted as much credibility as possible, but one review should be enough for other issuers. We obviously recommend CBI. And finally, it was awarded Bond of the Year by Environmental Finance in 2016. As previously discussed by CBR, there are a series of green bond principles that need to be followed in order to execute a robust, credible, and effective transaction. So, regarding the rationale behind the transaction, there were some important objectives to be considered, such as to underline the commitments of Mexico to climate change issues through financial instruments, to promote the role of NAFIN as a leading Mexican bank on the transition to a low carbon economy, and to create dialogue with investors on climate change-related matters. It is also important to mention that this transaction followed the guidance of Green Bond Principles 2015, and the net proceeds we received from the bond are being used to fund the financing of and/or investments in eligible green projects, which means any project meeting the eligible criteria, such as being related to renewable energy. Additionally, there will be available an annual report on the use of proceeds, as well as the environmental outcome of the eligible green projects. All of these available on our webpage, nafin.com. And finally, this is how we receive a positive certification from the Climate Bonds Initiative. according to latest standards on renewable energy. Thank you.
Thanks so much, Emilio and Arturo. Just a reminder that you can ask a question by using the Q&A box in the bottom right-hand corner. We're now joined by Rob Fowler, who's head of certification here at Climate Bonds. We've already had a couple of questions. Let's start with one for NAFIN, actually. Will NAFIN be issuing further climate-certified bonds? Emilio?
All right. Yes, we're working on it at the moment. I believe it will be done in a few weeks, and hopefully it gets the same participation and splash as the first green bond in US dollars did. And let's hope for the best, and we'll be telling the whole market in a few weeks about this.
Great. Next question. Why did corporate investment drop away from 2015 to 2016? Rob, one for you.
Oh, hi there. Can you hear me okay?
Yeah, loud and clear.
Excellent. We've seen an interesting behaviour from the corporates, and we've actually seen a pick-up in the second half of 2016 for corporates, so we expect it to beat last year's figure. But there's been an interesting reality in the broader bond market, not just in the green bond market, but the broader bond market about corporate issuance. And so that's been one of the forces that we've seen at play, where corporates have stepped back a little bit in the last 12 months. So the green bond market doesn't necessarily follow the broader trends of the bond market, and there are some interesting and unusual things happening in the global bond markets right now with negative yields and other pressures underway. So a lot of different forces at play. We expect corporates to re-enter the market and really drive up their volume in the second half of this year.
Great, thank you, Rob. Next question. How does certification work when various different sectors are bundled into one green bond? I'll pass over to Anna for that one.
Thanks, Johnny. Yeah, I think essentially the way that it works is our criteria, our sector criteria, are kind of a suite of criteria. And if you have a bundle of assets across different sectors, you just use the relevant criteria that match those assets and sectors, and you just pick up and put down the criteria that match the assets that you've actually got. So it's a bit of a pick and mix system, and then you can kind of tailor it to fit your own bond requirements.
Next question. What are the transaction costs of certification? Rob?
Yeah, thanks. We see that there are basically three components to the transaction costs associated with certification. One is the verifier and the commercial arrangement you need with them to do the pre- and post-issuance verification tasks. We see a variety of prices depending on the complexity of the bond as well as the maturity or the experience of the issuer. So that ranges up and down, but is still very much digestible in the broader scheme of bond costs and transaction costs. We also see a certification fee, which is charged by the Climate Bonds Initiative, that comes out at 1/10 of 1 basis point, so very small amount. So, for example, a $100 million bond, you'll see $1,000 for certification fees. And the third part of that cost component is the internal costs of the issuer, putting together their green bond framework, putting together the list of assets that they're funding with the bond proceeds, and the sort of internal resources that are required to do that sort of thing are a bit difficult to cost, but most of the time that's usually well absorbed by the organisation. So overall, we see that the costs of transaction for labelling are well below 1 basis point for the total transaction, and that's fairly easily made up with some pricing tightening.
Thanks very much, Rob. Next question. Regarding the climate certified bond in Mexico, so the NAFIN one that we have the presentation on, The slide says second-party review was provided, but it also says third-party verification is required. Rob, I wondered whether you could just explain the difference between those and what's required under the the climate bond certification process.
Yeah, so a second-party opinion is generally an organisation coming in, an external organisation coming in and looking at the arrangements put in place by the issuer to understand the sort of selection process for the assets, the reporting procedures and various other things. In this case, the second-party opinion has also extended its work and also checked the issuer and the bond against the climate bond standards. So they've basically done two jobs in the same approach, if that makes sense. And so they've also produced a third-party report, and that's been used by the Standards Board to provide the certification in this case.
Thanks very much, Rob. Any other questions? Use the box in the bottom right-hand corner. Final question we've got at the moment. What is the opportunity for a fund to issue green bonds on projects originating from developing countries? Are there any challenges to developing countries issuing green bonds?
I wonder if NAFIN's interested in discussing that one. Any particular challenges NAFIN faced in its emerging market status?
Emilio? We seem to have lost Emilio.
We're here. Sorry.
No worries.
We believe the challenges would be perhaps internally within the institutions, as well as perhaps some governmental issues. But as of now, the environmental reforms have been issued, and Mexico is going or heading towards a positive environmental, and hopefully it can be issuing more green bonds. And also, I will pass the word to Arturo because he can tell you a little bit more about how is the environmental market growing in Mexico or something like that.
I think one of the main challenges in selling these kind of bonds in the Mexican market, it will be selling the business model, because the investors in the development countries, they're not really used to this kind of bonds.
And as well, there's not such an. We must believe that these green bond issuances will help the market as well as the institutions, and we're not used to seeing this type of issuances, and it's something new for us. And I believe once we start seeing more issuances, then we'll start believing in this market, and it will also help the institutions as well as to gain more of a financial perspective and for the investors as well as for the institutions. Thank you.
Thank you very much. A big thank you to both our guests, Emilio and Arturo, for joining us and talking us through their certification process. Just a reminder that this session was recorded. I'll send links out to all those who have registered in the next couple of days. To keep up to date with all things climate bonds, including future webinars and our market analysis, you can sign up to our blog on the website climatebonds.net. Thanks for tuning in and have a good day.